The U.S. economy is facing an unending nightmare. All over the country, economic activity is dramatically slowing down as another recession begins. Hundreds of thousands of businesses are feeling the compounding effects of 2 years of persistent supply chain disruptions, shutdowns, labor shortages, and soaring inflation. That's why many of them are starting to announce massive waves of layoffs and store closings in a repeat of scenes last seen during the peak of the pandemic in 2020. At the same time, bankruptcy rates are spiking again, and industry CEOs are warning that this is just the beginning. In today's video, we're going to expose the stunning pace at which economic conditions are deteriorating all across America right now. But before moving on, please support us by leaving a thumbs up and subscribing to our channel so you don't miss the most important news. The health crisis faded away. Trillions of dollars in government stimulus for businesses and consumers have been issued over the past 2 years. Manufacturing facilities have been reopened, and supply chains continue to process record amounts of consumer goods every month. And yet, the U.S. economy is falling apart. In the first half of the year, economic growth has actually shrunk, and higher interest rates are still wreaking havoc on financial markets and leading major companies to slash earnings predictions, and consumer spending slows down. We were actually supposed to be witnessing some sort of improvement right now, but instead, companies are announcing mass layoffs, store closures, and filing for bankruptcy as they face the cumulative effects of hard inflation, supply chain imbalances, and dropping sales. It's quite hard to believe that the numbers have gotten so bad in such a short span. According to the Washington Post, we're still seeing businesses fail at a rate that is absolutely staggering. Over the past 2 years, approximately 175,000 businesses have permanently closed their doors all across the country. In 2020, after the health crisis broke out, nearly 280 companies declared bankruptcy, and that's according to Bloomberg. In the first half of 2020, at least 110 major companies filed for bankruptcy in America. Now, 2 years later, the U.S. has seen 221 bankruptcy filings from January to July, S&P Global data shows. Several iconic retailers, even some of the most established ones such as Walmart, are having to close locations around the U.S. as consumers' budgets get squeezed by soaring prices. Grocery stores have not been spared by the challenges across the retail space. Last month, Whole Foods announced the closure of dozens of stores. Shortly after that, 2 dozens of Sprouts Farmers Market locations were permanently shut down. Earlier this month, Lidl confirmed it would soon be closing several underperforming locations. According to industry CEOs, retail chain closures are far from over. In a new statement, Kroger, a Cincinnati-based grocery company that operates stores throughout the U.S., said it will be closing at least 6 locations in the coming weeks. According to the company, significant profit loss is responsible for the decision. These stores have lost significant profit for many years, and if left open, the losses are projected to get even worse going forward, spokesperson Sheila Harris explained. Your local CVS could be one of the locations the company is closing over the next 2 months. According to several news reports, the popular drugstore chain is shuttering 26 stores throughout September and October. Starbucks, which closed an eye-popping 424 U.S. company-operated stores during its most recent fiscal year, is prepared to close even more branches as economic conditions deteriorate. Howard Schultz, CEO, said in a video posted to Twitter last week, "We are beginning to close stores. This is just the beginning. There are gonna be many more," he stressed. It appears that every sector of the industry is financially hurting at this point. In July, the popular chain Olympia Sports said it would shutter all of its retail stores before the end of the year. Olympia Sports was established in 1975 with our first store at the Main Mall in South Portland, Maine. We've grown to more than 70 locations throughout the Northeast, Mid-Atlantic, and Midwest, the company shared in a brief posting on its website, noting that their journey, sadly, is over. The second quarter of 2022 also saw the closure of 240 H&M stores, and 70 Sears hometown stores revealed they'll be closing in the coming weeks amid the start of dozens of liquidation sales. Even financial companies that experienced record profits in the past couple of years are now confronting our dark economic reality. At the start of the month, PNC Financial Services Group, the fourth largest bank chain in the U.S., confirmed it is closing a total of 135 locations before year's end. In April, analysts from the financial firm UBS said they project there will be between 40,000 and 50,000 more store closings as the new economic downturn begins. In the past 2 years alone, we've lost Lord & Taylor, Steinmart, Family Video, Fry's Electronics, and Stock & Field, just to name a few. Meanwhile, companies like Kmart are almost gone completely, as the retailer has just 3 locations left open after closing more stores in 2022. But according to the Toys R Us CEO, the carnage is far from over. During a recent interview with Fox News, the company's chief executive officer Gerald Storch warned that in the fall, we're going to see record bankruptcies in retail. He emphasized that thousands of mom-and-pop stores will experience a decimation on Main Street, given that those chains have been struggling for years and are set to have big problems as we round the bend here after the holidays. So, it's going to really bite as we get to the holidays and beyond, the retail expert highlighted. Storch noted that the pullback in consumer spending is coming in from the bottom up, starting with lower-income Americans and then the middle class. Together, both groups account for almost 2/3 of the country's consumer spending. He also argued that the central bank's actions to raise interest rates will in turn make things too expensive and therefore depress economic activity even further. They're kind of killing the patient in order to cure the patient, he continued, adding that there is no soft landing here. Inflation is not transient and the outlook is not good. Economist and financial analyst Michael Snyder argues that store closings are happening fast and furious these days, and that isn't likely to change anytime soon. This is going to continue to paralyze economic activity in the United States for the foreseeable future. Mass business closures also mean that mass layoffs are underway. Many more businesses will be shutting their doors. There will be many more bankruptcies, and many more Americans will be losing their jobs, he predicts. Recent reports continue to trickle out about the growing number of job cuts across the nation. So far this summer, many major U.S. companies have laid off thousands of employees as executives fear more volatility in financial markets and worsening economic fundamentals. Amongst them, Microsoft reportedly laid off 200 employees in July, less than a month after the California tech giant announced it would cut 2,000 workers, Business Insider reported. The pessimism is rapidly spreading across Silicon Valley. This month, website design company Wix.com made its second round of layoffs of the year, cutting hundreds of employees, as company president and COO Nir Zohar noted that the world is experiencing an economic crisis and we have seen U.S. GDP fall without growth. Groupon also unveiled plans to lay off 15% of its workforce, which represents around 500 employees. Snap, the California-based developer of mobile app Snapchat, started laying off thousands of employees this month. So did online brokerage firm Robinhood, which cut 23% of its staff. with CEO Vlad Tenev citing a drop in trading activity, high inflation, and a broad crypto market crash. The move comes after the company laid off 9% of its full-time employees in April, a set of cuts that Tenev says did not go far enough. Similarly, data technology giant Oracle announced plans to cut 6,000 jobs. According to the data compiled by Crunchbase, more than 32,000 workers in the U.S. tech sector alone have been laid off in mass job cuts as of late July. When taking all the sectors of the industry together, there have already been hundreds of thousands of layoffs this year, and many more are coming in the months ahead. What we have seen so far is just a hint of what is going to happen to this country once we're into a full-blown recession and dealing with skyrocketing consumer prices and a collapsing job market. In essence, this is exactly what an economic collapse looks like, and unfortunately, it is just getting started. Thank you for watching. If you find our content informative, we strongly recommend 7-Year Apocalypse, the latest book by the economist and financial expert Michael Snyder. In the meantime, don't forget to hit the bell to always get our notifications, and please share this message with friends and family.